Good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, July the 15th, 2025. Of course, amongst other things, it is CPI day. First of all, let's just have a look and see what's sort of expected. So if we look at the CPI, obviously this is important because there's a big debate going on, obviously between the US administration and the Fed. And within the Fed, more generally, there is a couple of different sort of viewpoints. One viewpoint, which is taken by Powell, is that we haven't yet really felt any inflationary effects of inflation of tariffs. It's too early, and therefore we need another 2 or 3 months of data to understand if inflation will be rising because of tariffs or not, very simply. And so, of course, today represents one of those data points. On the other hand, you have people like sort of Trump, and we just had, for example, Treasury Secretary Bessent. You can see here some of the headlines essentially saying that one data point doesn't matter, that there's no evidence at this point that tariffs are causing inflation. Now, what is interesting is that excuse me, in Bessent's comments just this morning, just from half an hour ago, so he was essentially saying, "Oh, we shouldn't be looking at one data point in particular." So I just wonder whether he's seen the data. He hasn't said he's seen the numbers yet, but maybe just he's already seen the numbers and it's a little bit hot and he's already trying to downplay it. Whatever, we shall see. But if we actually just then look, let's just look and see what's going on. So the market is expecting, the consensus here is for ex-food and energy, which is probably the most important one, 0.3%. So as you can see, that's a rise of 0.1% from sort of last time. So if you sort of approximately sort of annualize that, you're talking something in the 3.5 kind of range, which is not great for the Fed. And if you look here at ex-food and energy, last time was 2.8, and then looking at the headline number, of course, you're looking at the headline number. Where's the headline number? At 2.4. So the point is, this is still well above what the Fed wants and the Fed's target. And a hot number today will definitely get the Fed's attention. So the question also is what will happen with the cool number. So before we just consider that, let's just see the range of estimates. So you see here that the median here, we've got a 0.25 sort of unrounded number is right in the middle there. The high estimate at 0.4, median at 0. At the low at 0.1 with a median of 0.3. So the dispersion is 30 basis points here. Just keep in mind the standard deviation is just 6%, so 6 basis points here. So keep that in mind once you hear or see, once we hear or see the number on Twitter or Bloomberg or whatever you have, just once we get that sort of unrounded number. What's also interesting is going to be just to see the input of sectors which are quite sensitive to the tariffs. So you're talking here, I've just got a little chart up here from Goldman Sachs, just looking at some of these sort of sectors in particular, like electronic goods, communication gear, household appliances. Some of these things here, video, audio equipment, communication equipment, luggage, personal items. A lot of this stuff is imported, of course, and a lot of it comes from China, where there are significant tariffs or projected also to be significant tariffs. So let's keep in mind a lot of this equipment which is imported, and just trying to understand how much of the tariffs have caused these sort of goods and items to increase or not. Other important things, of course, we have sort of a car insurance, used cars, airlines, and of course one of the biggest weightings is accommodation and shelter. So let's keep an eye on all the subcomponents. Of course, really what we're trying to figure out here and what the Fed is trying to figure out is exactly it's like, has there been any sort of impact yet of inflation caused by the tariffs, and if so, where is that coming from? But the market doesn't seem particularly worried. So if you just look up here, sort of 0 DTE futures on the ES, so the options, you can see here just a basic straddle with essentially 50 delta on both sides. It's going to cost about 32 points. So that's about 120 ticks or so. And that works out to, what's that? It's just over about 50 basis points. So about 0.5% of a move is priced in. Now, I've seen for a lot of these data points in the past, you get often up to 80 basis points or 1% or 1.25%. So this level of volatility, as you can see here at the money, is about 20%, and overall implied vol here about 14.7%. So we're in a fairly low volatility regime in general at the moment, and also specifically for the 0 DTE. It's telling you that the market makers are not really expecting a huge reaction, at least on the equities. And that might just be because if we just go back and look and see what's priced in, We know that in terms of the Fed, if we just look here, we look at this most days, but just to keep on looking at it, we know that nothing for July. So the point is here that it literally zero is priced in for a potential cut in July. And so even if we were to get a very, very cool number today, it's probably not going to be enough for the Fed to move, and the market knows that. So the July pricing is nothing. What would move the market is possibly if we got a cool number, we could get September pricing going up a little bit. So let's say from 16 basis points, maybe up to 20 basis points or so. And then by the end of the year, at the moment, we're at 46 basis points. That would probably, on a cool number, move up to, let's say, 50, which would come to just a straight two cuts. So at this point, as we know, by the end of the year, the market's been pricing in, a little over two cuts, a little under two cuts. It's repriced a little bit hawkishly in the last 24 hours. So that's the situation there. But just also talking about the Fed, going back to some of those Besant comments, which we got on Bloomberg about half an hour ago, he essentially said that, Trump is not planning to fire Powell, but he did say that the formal process of looking for his replacement was underway. He said there were some good candidates within and outside the Fed. And he seemed to be saying as well that he didn't really favor this notion of having a shadow Fed because that would be too confusing. But he did counterbalance that by saying that historically it was sort of normal and it was the convention for the outgoing Fed chair to resign his or her seat on the board as well. So this idea that maybe Powell would no longer be the Fed chair next May, but would actually sort of retain his seat on the board, and Besant's sort of gently suggesting that that would not be sort of historically the normal sort of practice. Okay, so in terms of some other stuff, we also have Canadian data this morning. We have the CPI from Canada. As you can see here at the meeting at the end of this month, essentially nothing priced in, a 16% possibility, so just 4 basis points. But really, where it could get interesting is more a bit like the Fed, sort of towards the end of the year. So we have meetings in Canada in September, October, and of course December. So at this point, we've got between almost like another full cut priced in. So if we do get some sort of softer numbers up in Canada, that would be probably one full cut. A further cut would be priced in. On the other hand, anything a little sort of more hawkish, of course, those numbers could come down. So again, just thinking about the CPI, if we just look at a couple of charts here, and we'll just go up to let's say like the 2-year, you can see that the 2-year yield has actually risen quite a lot over the last couple of weeks. So my question is, if the Fed is going to be cutting at least once and quite possibly twice this year and certainly next year, as I've been saying, there's probably some kind of cap. So even on a hot number, can this yield go up? Probably, but anything above 4% is starting to get into, I would say, areas where the market is not really that much more comfortable pushing up the 2-year. Of course, something like the 30-year is another issue here, and you see the 30-year has also been pushing up, and we do have that sort of steepening of the curve in general sort of happening. And of course, we'll see what happens with the QR rate later in the year, but definitely a hot number could push those yields on the 30-year above 5%. As you can see, we got pretty close to it in the last 24 hours. We got up to about 4.99, so just 1 basis point away. But it does seem that the market at this point is looking for new information to push above this 5%. What's also interesting, just looking at the stock market, it had been hovering around just sort of highs, but you see here on the ES futures, looks as though it's breaking out of this sort of little sideways consolidation. And if you look at here, the moving averages, the momentum 20, 50, 100, 200. Sorry, this stupid connection here. Okay, so the moving averages are pushing higher. This is still a very, I don't know why it's just doing this, a very, very sort of a bullish chart, and it looks as though the sideways consolidation is pushing higher. Sorry about this connection, guys. Very frustrating. What we've had this morning so far, we had JPM Morgan's earnings just like about 30 minutes ago. They seemed, just had a quick look at those. They seemed very sort of positive. Hold on, I'm going to get out of this. And what's also kind of interesting is that NVIDIA, if we go here, maybe onto NVIDIA, if my little chart will allow me to do that, there's been talk that, hold on, NVIDIA, let's have a look. You can see Nvidia sort of pushing high, and in the pre-market up to 171. So in the pre-market up, and that's on the news that their most sort of high-tech sort of chips, the H20, the sales seem to be resuming to China. You remember the Trump administration said they were too sophisticated. They didn't want the Chinese market receiving those, but there seems to have been a bit of a deal. Was that maybe a quid pro quo in return for sort of rare earth, rare minerals coming from China? But anyway, so Nvidia up, and that's going to be a positive, of course, for the Nasdaq today. You can see Nasdaq already pushing higher. It looks as though it wants to make another push higher, same as the ES. So it looks as though stocks are doing well. JP Morgan, good news for Nvidia. Trade deals, maybe not coming. It doesn't seem to matter too much. The market is definitely thinking that all of these sort of heavy tariffs will be watered down, number one. And secondly, the market is assuming that if the stock market falls too much, Trump will come in and sort of save the day and sort of juice it a little bit. So that's what's going on there. In terms of other things, that's probably all I really wanted to look at just this morning. Not a huge amount. Oil, again, just looks to me almost as though this is a bear flag. I mean, just stalling out here at the 200-day moving average. There's not a huge amount of good news. There was some talk yesterday from Trump about Russia that potentially, if Russia didn't and Ukraine didn't come together more for some kind of deal and Russia sort of stopped bombing Ukraine, then there could be significant more tariffs, potentially even on the oil industry. So you see oil sort of pushing up a little bit today off these lows, off this uptrend. But essentially, just looking at this technically, there's no, as far as I can see, sort of strong catalyst for a bull market in oil in the immediate term, and just seems stuck here between the 100 and the 200. And if anything, there's a couple of rejection wicks here just at this 200-day moving average. So it wouldn't surprise me at all if this actually starts, is more of a sort of a bear flag and starts to push down and maybe just retest back down into the low 60s again. But again, that is subject to potential sort of headline risk if there's some kind of further tariffs imposed on Russia and the Russian oil industry. Okay, I'm going to leave it there because I want to prepare for the CPI. So as I say, they're the numbers. Let's see what happens. And again, I think that the point here is that even if the number is a little soft, it doesn't guarantee that the Fed is suddenly going to start sort of cutting dramatically. So and conversely, if it's a little sort of hot, that's more or less priced in a 0.3. I think the market expects that, and it's not necessarily a negative for the equity market. And so therefore, I think what we could get at the front end of the curve is just sort of trading within, maybe a sort of a 6 to 10 sort of basis point range today, waiting for a little bit more information. Okay, I'll leave it there. Have a great day, and we'll keep the conversation going. Thank you.